Hello, everyone, and welcome to the Ventures Podcast. This episode with Robbie Heeger from Endaoment.org is incredible. That's ENDAOMENT.org as DAO in terms of a decentralized autonomous organization. So this is a platform for donor advised funds, for setting up donor advised funds for the crypto community. And what an incredible service. Because for those of you who aren't familiar with DAFs, it allows you to give, right? This is the end of the year. Those of you who are thinking about how to give, it allows you to give and have a full tax deduction on it, and then choose later what nonprofits to donate your money to. So we have a really great, wide-ranging conversation on this topic, and I couldn't be more excited to share it with you. So if you're listening, you can also watch by visiting wclittle.com, and there I'll have more extensive show notes to different topics that we talk about today. And if you're watching, you can also listen anywhere that you get your podcasts. You could just search for Ventures and it should show up. So with that, please enjoy this conversation with Robbie Heeger. All right, Robbie, welcome to the show.
Hey, thanks for having me on.
I'm delighted to have you on because as venture builders and venture investors, especially I've been investing in Web3 for 7 years now. We're always asking this question, at least thoughtful people are asking this question. Why does it matter? Like, why are we doing what we're doing?
Yeah, sure.
And when I heard about what you're up to and just delighted to be able to have this conversation. So would you kick us off and just tell us a little bit about yourself and what you're up to?
Sure. I'm Robbie. I'm president and CEO of Endaoment.org. And Endaoment.org is the first fully on-chain community foundation serving exclusively the crypto community. Community foundations exist in the thousands all over the United States. And what they specialize in is being a philanthropic services provider for a certain community, whether that's around a religious set of values or a technical set of values or a regional set of values and priorities like the Greater Bay Area or the Tri-State area or, South Florida or, the Jewish community or any number of other different subsets of philanthropists. Community foundations provide the philanthropic services to help those philanthropists achieve their goals. And Endaoment.org is a community foundation. So we are a philanthropic services nonprofit that serves exclusively the crypto community because their needs are just so unique and their values are really unique, and our ethos attempts to line up with that so that there can be a nonprofit institution for this group of new age investors that have seen this money or this wealth kind of appear seemingly out of thin air and turn around and operationalize it for impact. And what happens in the process is that we wind up being this really phenomenal use case for why crypto matters. Ultimately, what happens is people come on, they give us their crypto, we turn it into dollars, and then the people who have given us that crypto and that we've now turned into dollars have advisory privileges over the distribution of those dollars to a variety to really any of the nation's nonprofit organizations that meet our policies and are in good standing with the IRS. And so what winds up happening is that people come in, they give their crypto, and then they go out and start giving the dollars that were generated from the sale of that donated crypto to different nonprofits in their local community. And oftentimes this is a nonprofit's first interaction with crypto. And what we spend a lot of time at Endaoment on is making it really easy for nonprofits to accept these gifts so that when they're approached by a donor that says, hey, I have crypto, can you accept it? That they're not scrambling to find an answer, that they say yes, and that they have a partner in Endaoment.org that can help get them those assets as dollars quickly and easily into their bank account.
Love it. Okay, so let's dive right into the weeds. How does it work? Let's talk first to somebody who's made a little bit of money in crypto and wants to give back. What's the storyline of this person?
Right. So let's say you were lucky enough to be in the Ethereum ICO. And you bought a bunch of Ethereum at 50 cents or whatever the ICO price was. And Now it's been a few years and Ethereum no longer trades at the ICO price. And what you have is an investment that you made that has appreciated dramatically in
Hmm.
value. And you've held it for some time now. You've held it for over a year, which means it's long term appreciated capital gains. Uh, and what the US tax code allows for you to do is to make a choice. You can either sell those assets and incur the gain, or you can donate those assets as is and write off their full value up to 30% of your adjusted gross income for the year in which you donated them. Obviously, with the caveat that this is not financial advice, and please talk with your CPA about how to use a donor advised fund. But like the base use case is I have this crypto, it mooned. Maybe it's come down a little bit, but it's way above where I bought it at. And now I've made some money either elsewhere or on some of these holdings, and I have a tax bill to pay. And instead of paying the entirety of that tax bill, what you can do is you can decide to give some of your long-term appreciated crypto assets to a donor advised fund. And when you give to a donor advised fund, you get a receipt from Endaoment, the charity in this case, that says, hey, you gave us 100 ETH. And at the time that you gave us 100 ETH, we liquidated it and it turned into this much dollars. And you, as the donor, get to say, oh, I donated 100 ETH and it was worth this amount of money. And you get to write off the full value of that donation against your adjusted gross income for that year. So that means you don't have to realize the capital gain to be able to write off the value of the capital gain on your taxes within a given year. And that's like a really powerful tool that people in traditional finance have been using for years, for decades. Where what you do is you say, okay, at the end of the year, I made this much money. I owe this much taxes. If I donate some of my long-term appreciated assets, I can owe less in taxes and have this, what is a de facto like charitable checking account, where you can write grants as grant recommendations to the nonprofits that you care about over time, uh, without having to know where you want to give it to all up front. So you say, okay, I made this much money. If I give this much money, that's the max I can deduct. Okay, I'm just going to go put it in a donor advised fund and I'll figure out what nonprofits I'm going to give it to over time. And so what donor advised funds do and what we at endaoment.org provide in providing donor advised funds is we allow people to basically look at their tax obligation towards the end of the year, assess what they could offset by donating, and make a donation without needing to know exactly what nonprofit they're going to support after the fact. It's basically locking up an escrow philanthropic capital for your future use in achieving your philanthropic goals through grant recommendations. And that's very, very exciting because this is the fastest growing philanthropic vehicle in the United States. There are over $200 billion in assets under management in donor advised funds. This is like the way that traditional investors in stocks, equities, and bonds mitigate their tax obligation year in and year out by using donor advised funds to create deductible moments against their adjusted gross income. And that's what's happening right now, right? Like we are in the giving season. We see October 1st, the fourth quarter, as the beginning of the giving season. And so right now what's happening is people are starting to evaluate how much money they've made this year, looking at their tax obligations and asking themselves and their financial advisors, okay, what can I do to mitigate the amount of taxes that I owe come next April? And what we're excited about bringing to market and what our protocol offers and what our application offers is the ability for people to not know where they want to give to precisely yet, but still be able to make the financially prudent tax mitigation step of giving some of their assets away within the given calendar year where they made the income that they're trying to offset.
Yeah. Very cool. Very cool. Well, I've had the privilege of being able to participate in a couple DAF organizations and a couple DAFs over the course of my career. You're right; they are extremely helpful. Now,
Right
not
on.
not all DAFs are created equal. So you mentioned something about how your sort of rules and regulations and different ways that you
Hmm.
set it up. What are the different components of how you? What are the requirements of the types of organizations that can be given to with endowment?
Yeah, we have an org due diligence policy and an organization funding policy. It outlines that we don't support hate groups or people who, propagate misinformation.
Hmm. Hmm.
But oftentimes, a community foundation, because they represent a specific community, will align with the organizations that they support and do not support
Hmm.
into their organization funding policy. And we, as Crypto's Community Foundation, see it to be really important that we support as diverse a group of nonprofits as possible. So, really, we're trying to make sure that we can say yes to as many donors as possible, even if they don't, even if the grant recommendation that a donor is making doesn't align with our personal values. It's really more about, does this organization present, like a clear and present danger to society? Like, are they advocating for, unhealthy outcomes? Are they, uh, you know, lobbying for restriction of, independent rights and personal freedoms of people in the
Hmm.
communities that they serve. But outside of that, we're really trying to support as many different organizations as possible. The other way that different DAF programs are made differently is about what you can do with the assets while they're sitting in your donor advised fund.
Hmm.
And so when somebody donates to a donor advised fund, uh, the assets that they donate get liquidated for cash, and then that cash can either sit as cash or it can be actively managed. And, in the case of Fidelity Charitable and Schwab Charitable and Vanguard Charitable, Silicon Valley Community Fund, San Francisco Jewish Community Federation, you name a community foundation that offers donor advised funds, they're probably putting the assets under management into ETFs or stocks or different traditional finance vehicles. And what we found from crypto donors is, like, this is not very interesting to them. What
Right.
they want to be able to do is hold these assets in crypto backed investment opportunities. So, what we've done and what we've recently launched just 2 weeks ago was a new feature called Portfolios,
Mm.
where now in USDC that's sitting in endowment owned donor advised funds can be actively invested into either Compound, Aave,
Mm.
or into just plain old wrapped Ether.
Mm.
And people can choose to either, long the crypto market through Ether or earn yield on their USDC through Compound or Aave, and make sure that they aren't missing the opportunity to grow the value of the assets that they've donated um, tax free over time.
Mm.
And so we're really excited about that feature, not because Aave, Compound, and Wrapped ETH are the end of the road, but because they're the beginning of the road. This system is entirely extensible and something that we can expand out into other on-chain based investment and yield bearing opportunities, even off-chain based investment and yield bearing opportunities. But we are the only donor advised fund provider to provide the opportunity for people to on-chain take their USDC and long the crypto market with the USDC in the endowment owned donor advised fund that they have advisory privileges on, and be able to grow their impact with the growth of the broader crypto market. And so
Yeah.
that's been our number one requested feature. And so with V2 just coming out, just 2 weeks ago, that's what we're most excited to have put out into the world, is now, instead of just sitting in USDC, donors who advise donor advised funds at endowment can now choose between different yield bearing protocols as well as on-chain investment opportunities to grow their impact over time.
Love it. And you're going to add sort of different tokens over time. Like, what is that? I mean,
Yeah.
you're going to do similar to the centralized exchanges that have to have the policies of which coins they support. Are you going through a similar? Like, talk to us about that. What does that? What does that look like?
Man, it is uncharted waters. The the it does look a lot like Coinbase adding assets, right? We looked actually really closely at Coinbase's asset listing framework
Yeah.
in developing our own investment policy and our own, rubrics for evaluating new portfolios to add to the mix.
Mm-hmm.
And the idea is that we're kind of going crawl, walk, run, right? And so we're starting with battle tested, very simple, very straightforward investment opportunities. And over time, we'll start to add in more diversity of different assets. We will change our asset mix allocation. We will, seek to build partnerships with other protocols who are building risk-adjusted yield-bearing opportunities. But really, we have a higher standard to hold ourselves to, in some ways, even than Coinbase, because of the regulatory environment around community foundations.
Mm-hmm.
So
Mm-hmm.
community foundations have to manage assets that are under their control through the lens of what is called the Uniform Prudent Management and Investment of Institutional Funds Act. Also known as UPMIPFA for short. And UPMIPFA is a series of legislative actions across all 50 states, or like nearly all 50 states, that dictate that you have to take good care of capital that's been committed to philanthropic outcomes. So like if somebody's donated a bunch of money to your organization and now you're actively managing that money, you can't just go put it into a bunch of hyper speculative investments. You have to follow modern monetary portfolio management theory. And so that theory is kind of an open question mark for the broader crypto industry. We work a lot with our partners on the venture side about like understanding how they set guidelines for what they're allowed to invest in with their LPs. But we also have done a lot of work with our own legal team about designing a macro allocation for the entire endowment ecosystem that limits risk, right? So we say, okay, only up to a quarter of our assets can actually be in ETH at any given time. And everything else has to be in money markets or being held as USDC. And so the growth trajectory for Endowment V2, the sort of like iteration that's available to us now that we have this feature set, is the ability to come back to the board of directors and say, okay, we'd like to think about adding the index coup DPI to the portfolio option set. And where does that fit into our broader macro allocation, and how do we limit the overarching risk by putting sort of a deposit cap on these portfolio options? And so we've built a system that aims to fulfill the UPMIPFA regulation. And that's something that's like super unique to Endowment, that in endeavoring to create a crypto native community foundation, we have sort of signed ourselves up for these, really interesting challenges around how do you manage risk, and how do you maintain a certain tax status and maintain a certain compliance and regulatory status without compromising on your usage of the new technology.
Now, a couple of DAFs that I'm a part of have non-trivial amount of fees when I'm making donations. I always sort of like look at that and be like, but I justify it because they themselves are a nonprofit and they're helping impact, so I don't necessarily think too much about it. But what do the fees look like with Endowment?
Yeah, so I too had a donor advised fund before Endowment, and I was always kind of put off by the fee schedule. Just because not because they were charging me, like I want them to charge me, they're doing a service, right? Like, but because of how it was charged and the methodology behind it, right? Most donor advised fund providers look at your average daily balance and charge a fee based on that average daily balance of, anywhere from 75 to 125 basis points. And then on top of that, for the assets you invest, they charge an additional assets under management fee. When we were looking at the endowment fee architecture, we were like, that doesn't really make sense, right? Like the donor advised fund provider should be incentivized to have the assets actually doing the impact in the community that they say to be supporting. So we structured our fee architecture around when we actually provide services to donors. So we see ourselves as providing 3 core services. Core service number 1 is donation processing. So when money comes in the door, we take 50 basis points, because what we're doing is processing that donation, issuing a receipt, going through all the checks over that donation, like we are doing our baseline, utility or remit as a nonprofit, right? Taking in donations. Then the bulk of our fee is 100 basis points, so 1%, when you grant the money out the door. And so that's like an ethical, on purpose choice by us at Endaoment, right? So like basically what we're saying is like we should be incentivized to build a application that makes it actually enjoyable to give it away. Like if you go and use any of these other major donor advised fund providers, all of these, platforms are kind of mind-numbingly old school, or just don't feel like they were built for like the consumer age of web, because they've never had an incentive to, right? Their incentive has been to sit on the balance as long as possible. Right? The average donor advised fund takes 5 years for the donor to deploy it. And we were like, that kind of stinks. Like people should like give, and then pretty, like they don't have to figure it out today, but like pretty quickly, we want them to put that money into use in the community. Right.
Yeah.
And
I think there's something like 60, I have to find the exact number. Many billions. I heard something like 67 billion. I'll try to find the number, is currently locked up in the US in DAFs and just not being deployed. It's more than that. It's bigger than that?
It's more than that. Yeah. The average DAF gives out about 22% of its value per year. And so it takes a DAF about 5 years to get through its entire balance. And right now there's over $200 billion in assets under management at DAFs. And so they're all just sitting there.
200 billion. Okay. Wow.
Yeah.
I knew it was some huge number. Yeah.
They're all just sitting there. And our take here is that like, we're going to build a better donor advised fund product if we're incentivized to make the grant making experience as smooth and frequent as possible. And not just through our own fee metrics, but also if we incentivize the donor themselves to actively drain their donor advised funds. So that's when we start to get into like really exciting concepts that we're beginning to play with around, giving token rewards for people who are actively giving out of their donor advised fund, or, like there's all these cool new toys at our disposal.
That's cool.
And what matters is like the broader narrative and theory behind how you set up your assets under management fee schedule. So yes, we take assets under management fees when they're invested, because if somebody decides that they want to hold off on operationalizing this capital, then yes, we're providing this investment, service, and therefore we should be charging an investment fee. But until that happens, our main win is getting money out the door and assets into communities. And so we've structured our fee schedule to be reflective of that end goal, and otherwise just look to align it with what the sort of industry expectation is when it comes to like donor advised fund providers.
1% is super reasonable. So yeah, plus the 0.5 when you come in. So one of the DAFs that I'm a part of in the traditional world, because I've been investing in startups for about 12 years, and I'm always looking for more impact investment. Like it's a big conversation topic. So one of the DAFs I'm working with actually allow me to do impact investing if it meets their criteria, right?
Yeah.
Is that
like the board has approved some amount of impact investments. Yeah.
Right. It allows me to essentially through the DAF acquire equity in small businesses that are growing and hopefully making positive impact on the world. Is that something that you're going to be able to do through Endaoment, or is it where is that on the roadmap, or is that not quite in the scope of what you're doing? I'm curious.
Technically feasible, operationally time consuming.
Yeah.
I could see us getting there when we have more of that product market fit sort of outlined and defined, and we're sitting on more assets under management, and we are hearing clamoring for that.
Got it.
Like for me and my, like in our team's broader journey, like it's enough for us just to be providing a smart contract powered donor advised fund,
Yeah.
right?
Yeah.
Like that is a big bite
For sure.
that we're chewing right now, you know? And like by introducing portfolios, we take a more complete bite into the crypto native donor advised fund roadmap. And there are a number of different things that we could do down the line to further, you know, increase the product offering of Endaoment's donor advised fund to like compete with the other donor advised funds out there. But right now, what we know is that there's a cohort of new investors who have appreciated assets, who really value keeping those assets in the ecosystem where they appreciated in value.
Yes.
And so by providing a crypto native donor advised fund that doesn't immediately transfer their money back into traditional finance based investments, you know, like we speak to the core values of our donor community. And I think what we've learned is that they would rather see us move slowly towards the full-throated crypto native endpoint than move quickly towards the non-specific, just generic donor advised fund competitor endpoint. And so while we do want to do things like accepting stock gifts or moving more assets into off-chain investments, you know, like treasure, like wherever the yield, you know, follow the yield, right? You know, or follow the impact, right? Like it's not as important as making really great public infrastructure for processing donations in an on-chain environment.
Yeah. Yeah. That's good. Okay. So you are absolutely correct that there are a whole new set of toys and tools to work with and to innovate in the space of philanthropy. I'm curious how, so tell us more about like the token model. I don't know how much you can say yet, but tell us more about sort of how you're thinking about the roadmap for a token model within giving for you know, encouraging velocity and those kind of incentives.
Yeah, absolutely. I mean, we've been talking about this from the very beginning.
Mm,
And from the very beginning, we've been talking about our desire to progressively decentralize into a space where our community of users is overseeing the board of directors of the community foundation using a token that is rewarded to them based on their participation in the protocol, right? And like that's been something fairly straightforward, you know, like devil's in the details, obviously, but like that concept has been something that we've been talking about from the very beginning. Uh, Later this fall, we'll be announcing the broader plan for this progressive decentralization. And so I do have to sort of hold off on communicating anything about like the specifics about how
sure.
our sort of token will function and
Sure.
how it advances the nonprofit mission. But what I can say generally is that we see a very clear opportunity to look at the moments in which users spend gas on endowment and to say every time somebody is spending gas using endowment, they are, in theory, advancing our charitable mission, right? They are advancing the management and giving away of digital assets to nonprofits.
Hmm.
And the thought process behind token rewards is to focus token rewards on active participation. And in the case of a nonprofit tax exempt foundation, you can only really do things, you can only give away things or use staffing or resources towards your nonprofit mission. And so our mission at Endaoment is to manage and encourage the charitable giving of crypto assets, of digital assets, right? So if we can draw a straight line between the action that somebody's taking on chain with our charitable mission, we can pass tokens in that moment. And that's really how we're looking at it is, okay, how do we think of this protocol as basically a protocol for philanthropic impact? And how can we encourage good philanthropic behaviors, good philanthropic outcomes by using token rewards at the moments in which people are demonstrating that positive philanthropic impact, right? Oftentimes at nonprofits, your seat on the board of directors is dependent on how much money you give, right? Or your voting weight or your clout is based on how much money you give. And what this architecture gives us is the opportunity to say, like, actually, that's not the metric. Like, the metric is how much operational efficiency are you injecting yourself into as a donor or as a community participant?
Right.
How many organizations are you onboarding? Are you actively making new grants out of your donor advised fund? Are you participating in the sort of curation and endorsement of nonprofits that are doing good work? Are you participating in governance decisions or sitting on committees or like being a part of the decision-making apparatus for endowment? And if so, you're advancing the mission, and therefore you should be entitled to more of this governance right over the leadership of Endaoment.org. And that's like the big capital V vision for Endaoment.org that we set out for originally. And when we set out for it, it was like, okay, in order to get to this place, we need to first have a primitive that is proven and works. So insert the donor advised fund in like Endowment V1. And then number two is we have to give them assets to manage. Like there has to be collateral on the line for that governance action for the people who are overseeing that DAO, right? Yeah. And so that means getting assets in the door. And right now we sit on like $20 million in assets under management. And so like those two things have set us up to now go through this process of saying, okay, who are our most active advancers of the nonprofit mission of endowment? And how do we give them oversight over the multi-signature wallet that sits as the board of directors? And that's like, man, like that's some deep crypto native, like blowing the mind. Like we talked to our board about it and they're like, oh, wow. Like this is the deep end that we were promised,
That's right.
Like rolling out a donor advised fund that sits entirely in USDC. Like, all right, we can do that, like doesn't seem like a lot of risk, adding a few investment portfolio options. Like, all right, like we can mitigate risk and we can articulate what we can and can't do. But now starting to say like, okay, the people who are using this DAF platform are going to be scored and rewarded with oversight tokens for the election of the governing body, the board of directors, that will serve as sort of like the hierarchical leadership of Endaoment.org. That's when we really start to get into like, whoa, like what are the new crypto tools that allow us to run financial, like community philanthropic institutions in new ways that are more aligned with desired outcomes. And like, that's when my like crypto dork, wheels get turning, right? Then I'm like, oh man, this is so sick. And that's what's most exciting about V2 is like, we're finally here. We're at this moment. So more to come later this fall. We'll be sharing more about what's happening as far as progressive decentralization, but the concept and the idea of us tokenizing the election of our board of directors is something we've been talking about for a while. And we're just excited to like actually show everybody the contract architecture work that we've been doing, the entity architecture work that we've been doing, the bylaws edits. And, like a lot of this stuff, we talk to our lawyers and nobody's ever done it before. And so we're writing new language for the first time or coming up with an entity architecture based on, hypothetical research from A16Z and Paradigm and, our own legal backgrounds and different people who we meet at panels and stuff like that. And, I think like, it's just such an intense and details oriented problem. And I just really appreciate our community's patience with us as we work to get this right, because I think it will wind up being an example for the broader crypto market about like, what does it mean to have real world entities that maintain their tax exempt status, in our case, tax exempt status, or retain their regulatory status, whatever that status might be, but still have token powered decision-making environments.
It's great. It's great. Okay, so last topic then is, I'm part of I'm a founding board member of a nonprofit called Real Escape from the Sex Trade, based out of the greater Seattle area. Human trafficking in general is a terrible problem, but sex trafficking specifically in the United States is more horrific than most people realize. And
I
you know,
believe that.
fundraising is always a thing, right? We've been going for 12 years. We now work really closely with law enforcement, and it's a great organization having real impact. And then I also work with an international NGO called International Literacy and Development that helps low resource language communities develop a language, learn entrepreneurship skills, start pineapple farms and different agriculture
Amazing.
business, right? So
Awesome.
how do these traditional organizations accept money? What does it look like from the nonprofit side? If you're making it super easy, like what does that look like? What are the CFOs of these organizations that are listening to this episode? Like what do they need to know?
The biggest thing that people who work at nonprofits need to know is that they already accept crypto. If you have a 501c3 that's in good standing with the IRS, we have a organization profile page already ready to go for you. And all you need is a US bank account to be able to accept any crypto asset as a donation as dollars
Mm,
into your bank account.
mm,
What we do is we link your bank account with an escrow contract address
mm.
that we use to custody funds until we wire them out to the nonprofit uh, that they've been designated for. And so the biggest thing we hear from nonprofits is they go, "Oh, I had a donor approach me. They said, I'd like to give you some crypto." And I said back to them, "Well, like, we don't accept crypto." And that's the number one thing that we don't want to have happen for nonprofits. If somebody approaches you and says, "I have crypto and I want to give it to you,"
Right.
you say yes.
You say yes.
And then you start figuring out how it's going to happen. And your
Right.
first stop should be at Endaoment.
Mm,
And when you come to Endaoment, you can either search for your organization or you can just go to app.endaoment.org/orgs/your EIN. So if you have an EIN and you're in good standing with the IRS, you're going to pop up on Endaoment. And it's just a matter of you linking your bank account info with our escrow address for that organization. We don't charge organizations anything to use our service.
mm.
Other services out there charge you thousands of dollars per year plus a percentage of volume.
Right.
We charge donors 1.5%.
Right.
Orgs get the full value of the grant recommendation wired into their bank account, less a $15 wire fee. And we have no fee if you accept it as USDC, as stable coins into a crypto wallet. And so I think like the number one thing for both of these organizations is do they have a US 501c3? Is it in good standing with the IRS? And if so, come and claim your contract address on Endaoment. And that will give you a landing page that you can drive. We have buttons that you can put on your website that say donate crypto via Endaoment, and that will give that your donors a landing page where they can either say, "Oh, I have an Ethereum wallet and some Ethereum based asset," or, like, take me to the over the counter desk and let me give some Bitcoin or non-Ethereum based asset. But I have a methodology now to go from crypto to dollars in the bank account of the organization that I care about. And I think that's like just such a powerful experience for both donors and organizations alike, but really, truly, mostly for the organizations. When organizations have that first experience, it's like, what have I been doing? And so we really want organizations to know that there is free infrastructure out there for you to direct donors to, for them to be able to take their crypto assets and instead of selling them first and incurring the gain and then having to pay the taxes and giving you 70% of what they were going to give you, that they can give the entirety of that asset up front and give you the entire value of that asset as a donation, as dollars. No magic wands, no price risk, no new policies, no new subscription costs, no new board policies. Like, snap of your fingers, just bank account wire straight into your bank account and ready to be used by your program. And I think like that's the biggest misconception that we see amongst nonprofits. And so, anybody that we can recruit to evangelize that every nonprofit, as long as they're in good standing with the IRS and they pass our org due diligence policy, can accept any crypto asset, because we have over-the-counter capabilities and we have in-app capabilities. So there's no limit. If there's a liquid market for it, if it's an NFT, we'll probably take it, auction it, and give you the dollars. So I really think the thing that breaks our heart the most is when an organization turns away a donor because they didn't realize that they had access to this free public infrastructure for processing donations for nonprofits.
That's awesome. That's awesome. Okay. Well, I mean, I just last nitty gritty because I'm genuinely curious because AML, KYC and this whole and identity. What's preventing me from going and like claiming the Red Cross and then putting my crypto address and
oh, for sure.
we have
a full-time staff. Yeah, we have a full-time staff that's dedicated to validating and due diligencing each organization that we pay out to. And we are held to very strict standards from Circle, our payout wire provider, as well as from the government about being able to prove that the funds that we're granting out to nonprofits are actually going to those nonprofits.
Right.
So we have a whole diligence process where we, get bank letter verifications, confirmation from a fiduciary at the nonprofit, some sort of attestation to their account numbers and linking it back to their organization. We have an extensive diligence process on the .org side that is facilitated by a couple of different staff members at Endaoment.org, and that's really what our fees go to support, right? Like our fees are going to pay that team of people who's making sure that the money isn't getting intercepted by you, if you're not the representative for the Red Cross. Right?
Yeah. It's good. All right. Well, I love what you're up to, Robbie. This is amazing. So where can people find more? What's the status of what should be people excited about that's upcoming? Give us the lowdown here.
Well, it's giving season, folks. You can only give and deduct against your 2022 taxable income if you give in 2022.
Right.
So you have until the end of the year to give. We would love to help you on that journey. You can come and open a fund at endaoment.org. You can learn more at endaoment.org. Really, if you go to endaoment.org, you can't get too far lost from there. But you can also come join us in Discord at discord.gg/endaoment. That's ENDAOMENT.
Cool.
And you can follow us on Twitter at endaoment.org. So endaoment.org on Twitter.
Love it. Robbie, this has been great. Really appreciate your time.
Hey, thank you. I had a good time. And, you got a little video, Corgi sleep video in the background here as well.
Perfect.
For those on audio, they won't get it, but
they won't get
video people will get the beautiful sleeping squid in the background.
I love it. All right. Take care. Appreciate it.
Thank you.
All right, a couple quick things before you go. Number one, I have a general newsletter where I write about technology and startups and health science and teaching people to code. And I write about a variety of different subjects that we talk about on this show. So if you go to wclittle.com, there you'll be able to subscribe, and you'll also be able to subscribe to particular topics. If you're just interested in one or a few of them, you'll be notified right when I publish new content in those areas. Number two, my partners and I at Proto Ventures have a portfolio company called Startup Rocket. If you go to startuprocket.com, there you'll be able to receive coaching guides and customize an operations framework for you and your team and your advisors to be on the same page in terms of what is the appropriate next step for you and your entrepreneurial journey. And finally, if you wouldn't mind leaving a review anywhere that you have listened to this podcast or watched this podcast, it'd be super helpful to help those who might be interested in consuming this content as well. Thank you.